Alright guys, today is Sunday, October 22nd, and I'm just doing my weekly sort of recap and also my day 12 recap. So October 20th, the Friday, was my day 12 of my paper trading account. So I'm just doing a little recap of those trades that I had that day and also just kind of talk about my week here. Now, on Friday, I closed red on the day. It was kind of similar days that I had on Thursday, where I was down, then I came back up, then I went back down, then I lost some, and then I got back some. It was just kind of swinging, and kind of what happened on Friday as well with me. I started the day off, I was up, then I lost some, and then I lost more, and I closed the day red. So we'll talk about what the trades were that I took, starting with ENRG. ENRG was my first trade of the day. It came onto my watch list. It was from my watch list, and it was ended up there because Twitter. I was just kind of pre-market going through Twitter feed, and the people I follow, somebody posted about ENRG. There was a catalyst out, merger deal, low float, and it was below the dollar mark. So all these indicators looked good to me. I pulled up the chart, and it was basically hovering around the 65 67 area. The pre-market high was 75 at that time, which was the pre-market high when the market opened. So it was a pretty good at the quarter level price level high, and if they break 75s once the market opens, it opens up the room for a push towards one. So pretty good setup. There was some resistance in the 80, but if the stock had strength, it had a catalyst out, low float, people were talking about it on Twitter. There was it was just the hype was there. So I figured if the stock opens up and it shows some strength, it could potentially take out the pre-market high, or it could take out this 80 level and could get a run towards one. And if it broke one, there will be more volume that will be coming in, more people looking to trade it, and usually $1 breaks are pretty powerful. There's a lot of strength in them. If you're on the right move at the right stock, you could it could spike up quite a bit. So I was watching it right here in the 60s pre-market, and then I had a plan on it. So I wrote down, I wrote catalyst out. It's below $1, but it was already up about 128% in pre-market on a 300,000 plus volume. So I figured, it is a bit already up, it's about above over 100%, but these low float below one, could really run, and they could go, 200, 300, 400,000% in one day. So there's a huge chance for these to spike, especially if it's the right stock and a lot of people are, a lot of traders are looking for momentum. So I pulled it up. I had a plan on it, getting in on a good setup, possibly above the pre-market high. So if it broke pre-market high and it pulled back and gave a plain setup, I'll jump in. I didn't want to jump in right out of the gate on the first candle because it could get stuffed and basically just drop the whole day. So this candle came through a lot of volume. I was watching it, I was interested, and it started pulling back, gave a perfect 1 minute setup here. Low volume pullback, and then it starts spiking here, and it's still below the pre-market high. So I figured if I jump in on this 1 minute setup, I could look to add on the if it does spike back up there, then that means the stock has strength. I could look to add on the pre-market break. The stock did exactly what I thought it would. It's just I added 4,000 shares at 67, and I was gonna add another 4,000 at the break of 75, and then basically scale out in the 80s, right? Because I figured there was some resistance in the 80s, so I wanted to add here and then look to scale out. What ended up happening is, and if I did add at 75 another 4,000 from 67, my average probably would have been around 70. So 10 cents from 70 to 80 on 8,000 shares, that's $800. So it would have worked out. It was a picture perfect trade in my opinion, at least. It jumps up to 75. It's a lot of volume coming in, a lot of shares going through at the ask. It's hitting the ask, and I knew it was going to break it. I placed another order for 4,000 at 75, and it pops right over to 80. And as soon as my order went through, there were still orders going for 75. I started scaling out. I sold 1,000 at 78. As it was coming back down, I sold another 2,000 at 75, and I figure I still have 5,000 shares left. If this pops back over, breaks 80, I'll look to sell more and basically scale out just above 80. I wasn't gonna wait to hold it if it goes till one. I wanted to build that cushion, and then if it does break one, then I'll go in with a smaller share but look for a bigger cent gain. go from dollar only buy 2,000 shares and maybe let it go up to 20, 25 and then sell my whole position, because I would still be up on the day. I could set my stop at break even, just not to lose any money, right? So I thought that I sold, I had 5,000 still, and then I pull up my account summary just to see what my profit was looking like, what I had locked in so far. I realized I only have 1,000 shares left. My 4,000 share got rejected. My 4,000 share order at 75 got rejected because in my practice account, I can only take a maximum of 5,000 share position. I have read that before, but I completely forgotten in the moment. I just thought I could take it, and I completely forgot. So my order got rejected. And I only have 1,000 shares left in the 70, and this is basically breaking 80 at this point. So I'm like, oh no, I don't like this. I'm gonna add over 80. I added 1,000 shares at 82, which brought my average from 67 up to 75, 74.745, something like that. So let's say 75 cents, brought my average to 75 cents. I have 2,000 shares. I was waiting. I added this, it got up to 85, pulls back a little, and I was like, okay, this is pulling back. Maybe we'll get a second 1 minute pullback entry here. It could basically take off that, and we can look to go above 80, reach 90. I figure, the stock is getting close to 1. It might just pull through. It might go to 90, 95, 1, break up 1. It actually didn't end up happening. This red candle started getting a bit more steep. If it came down to 80 and it held that, and then the next candle made a new high, broke 85, that would have been ideal. It came down to 80, couldn't hold that level, started breaking, came down to 75, 78, and at this point I knew my average was 75 for 2,000 shares, so I placed my order for break even right below the 75. I figure if it hits 75 and it doesn't hold, this trade might not work after. So I just basically got out break even. Again, my exit was 74 cents for 2,000 shares. I got a little slippage, but that's fine, a 1 cent slippage on that. But that's what happens sometimes with hard stop losses. When you have a hard stop loss and the stock prices goes too fast, you might get that, sometimes it could be even worse. Sometimes you can stop out, with a 10-20 cent slippage. Has happened to me in the past, so that's why I don't like using stop losses or hard stop losses. I just like mental stop losses. But with this one, I just wanted to place it at break even and basically get out. And I got out at 74, not bad. And then I was still up basically, I think 202. So overall, my average was on 4,000 shares long. I bought 4,000 shares at 70. Oh, actually, that was 5,000 shares that I bought, not 4,000. I'm just going to change my Excel sheet here. I made an error. I added 4,000. So yeah, I had 5,000 shares with an average of 70 cents, and I got out at 75. The average basically of all those shares that I sold in the 78, 75, and then the rest at 75, and I also added at 82. So roughly average is 70 cents buy in, and then 75 cents get basically outage on 5,000 shares, and I locked in about $260. What happened after that was I wanted to jump in again just because I felt like the stock still had strength, and I jumped in on this 1 minute setup here. It was this one actually. This red candle here, little doji that it formed. I jumped in here as soon as it got back over 80. So it went over 80 again, pulled back, had this little candle, and then it was getting back over 80, and I added for the push for the break of 85. But this time I only took 1,000 shares. I knew this is not the right setup. I just wanted to basically take a stab at it, and I need to stop doing that because then once I have profit on the day, I need to be able to preserve them. What happens is if I have a profit on the day, I feel like I can take little stabs at things that might work and the odds are not in my favor. So in that point, I'm basically gambling, and I need to stop doing that because that's not what trading is about. If you have profits, doesn't mean you can take stab at things that might or might not work. You still want to take trades that have a good probability, good odds in your favor of winning. So this trade, I could have easily avoided. I shouldn't have taken it. In the hindsight, right, it makes more sense. So I jumped in here in the break of 80, added 1,000 shares, got up to 85, couldn't hold it, came right back down, and that was pretty fast. Came right back down, went down to 79, and I was like, I don't think this is gonna work, but I still hesitated to sell. I could have gotten out in the 79s or in the 78, 75s even. I ended up getting out. I believe it was, let me see here. I believe it was, so right here. So I filled that 80, no. I filled that, where is it? right here. I filled at 83 after it got over 80,000 shares, and I ended up bailing out at 75 actually. So I did bail out at 75, but my entry was a bit high, I guess. It was at 83, not 80. So right here, as it was basically coming up to break this level where it double topped, I got in at 83, looking for that push, a break of 85. It couldn't break it, got down to 79, and I hesitated to basically bail out right away. And I ended up selling on, I think it was this candle right here, low of 75. Yeah, I got out right here somewhere. And that was basically my second trade on it. Lost money, and I was down. I think my profit at that time was like 150, something like that, because I lost around 80 on that trade. It was an 8-cent loss from 83 down to 75. So that was my second trade, and I was kind of like, wasn't feeling good about it, but I was like, well, you know what, it's okay. I'm still up on the day. I'm just gonna not take any more stupid trades. Well, that was before QURE showed up on Twitter. Again, on Twitter, I mean, Twitter sometimes does give you good, if you're following the right people, it does give you good hints on the stocks that are moving, or some other people are trading it. You could look for a possible play, especially if they're saying like, oh, over this looks good. They might be looking for an entry. Some people just basically tell. I usually put my ideas on Twitter as well, like, oh, looking for entry or looking for a 1 minute pullback on this, and if it happens, I'll jump in, and if it works out, maybe somebody else used my idea and did it too, right? So a lot of people, just for good karma, put it out there. And I saw on Twitter somebody posted that QURE was basically pulling back, and could be a good setup back above basically 17, so right about here somewhere. So I pulled up on the 1 minute, is pulling back, and again on my paper trading account, I don't have all these indicators like these moving averages that I have on this. And as you can see, if I was on this chart, maybe it was pulling back. It was a great support level here at this, and I believe this is the simple moving average here, 20 simple moving average. It's this green line, and it pulled back right into there, had some support, and it got up. And as you can see later, it pulled right back to it again, and it basically bounced back. So it was a good it was a good trend line. The whole day it was basically doing that. It was holding that trend. So it pulls back here. The stock gets over 70. I tried jumping in, but I hesitated. I was gonna jump in with 500 shares, but I hesitated. I was just like, oh, I don't feel good about this, and I didn't. And as soon as this gets over 17, it goes to 1720. The next candle breaks 1720, runs all the way up to 1740 or 1750. So I missed about 50 cents there, and I was not feeling good about it. I was just like, oh man, I knew I should have jumped in. I missed out. I'm gonna look for another trade on this. And that's when right away I should have been able to catch myself there and be like, nope, that is revenge trading. But I didn't. I waited for this 1 minute pullback here. It was, as you can see, this is not a clean 1 minute pullback right in this area. It's more of like a symmetric triangle, I think it's called, or symmetric triangle. I don't know much what they're called. I know there's ascending triangle, descending triangle, and there's one where basically, let me show you guys. There's one where it kind of pops like this, and then if it gets over that, it basically opens up room for more bullish moves. And I think it's called symmetric triangle, if I'm not mistaken. And that's exactly kind of what happened on here. I thought it was forming the symmetric triangle. I was looking to jump in over the 17, I think it was 1740. Yeah, that's what I was looking to jump over. I had my order ready at 1741, and I prematurely added before it kind of actually got over 1740. And 1740, basically, this candle got up to 1739, and that's when I jumped in as it was coming up, and that was basically the top of the candle, and it started pulling back. And as you can see, although this candle looks mini, it pulled back from 1739 to a low of 1707. So right away I get in at 1740. I think my entry was 1739 if I'm not, oh no, 1740. I got filled at 1740, and this candle looks pretty tiny, but it went about almost 50 cents away from me, and that's the thing with higher price stocks. The reason I don't trade them is because they have a larger spread, and they move in sometimes 10 cent increments. They'll just quickly jump up 10 cents, or they'll drop 20 cents right away, and that's exactly what happened. It got down, and I was just like, oh no, this has gotten away from me. And then on this candle here, as it basically got down to 17, I bailed out, and I think my exit was 17 something. Let me see here. 1705. That was my exit. I got in at 1740 and I got out at 1705. That is a 35 cents loss that I took on a trade that I did out of revenge. So as you can see, when you do trades, you don't have a solid plan on them if you do them based on a wrong. If the trigger to get into the trade is out of emotions, you're 90%, there's a chance that you're wrong and the trade is going to go away from you, and it's going to go away giving you a bigger loss than what you should have had or what you should have taken on that stock, just because you're jumping in without the right mindset and you don't have the right exit strategy in place. And I didn't. On this stock, I had no exit strategy. I just jumped in, knowing that I missed the first pullback or the first back above 17 play, and I am not trying to miss another one if it gets over 1750 again, because it's going to go up to 18. And that was a pre-notion in my head that led me to losing on this trade and losing a lot more than what I should have. So that taught me a lesson that it's just better to not get greedy, and learn to protect the gains that I had. If I wouldn't have taken the two last trades that I did that weren't on a clean setup, it was more of a stab, just let me see how it goes, just because I was up on the day, I ended up closing red on the day, messing up my accuracy for the day, and also giving away profits, and also just losing my confidence and my mental capital, right? I lost confidence because I felt like the trades I took, they weren't. In order for me to build confidence, especially as a new trader, and if you're out there watching this and you're a new trader and you want to build confidence, you want to have great accuracy. If that means that you have to lock in your gains when you have them and you lock them in, and just to close the day green every day, if you close the green every day for 10 days straight, your confidence level is definitely going to be up. And you might, if you have your other psychology aspects right, like you're not chasing stocks, you're not just jumping in because you're too greedy or you're too confident, the market will humble you, right? So as long as you have those right, you're just going to feel more confident taking the right trades. And when you're confident and you're in your zone and things are flowing, more likely you're going to be taking the right trades, you're going to be taking the right setups, just because your mentality is, and you're just so focused, you feel so great, your confidence is up, you're waiting, you're not hesitating. It's a bunch of things, right, that all come down when it comes to trading that contribute to your good trades versus bad trades. So my lesson out of that is, when I have my gains, I need to lock them in, I need to protect them, and I can't take other trades that might be bad and they might lead me to have a losing day or lead me to have a red trade, just because I am up. I need to realize that I still need to take good trades even if I am up, because that's just better for me to add more to my daily gain and feel so much more better about myself than adding a losing trade just because I wanted to take a trade. So that was a big takeaway from Friday, and I know moving on to Monday I am going to be working on that with full consciousness until I become subconsciously competent in that matter. So now let's just a quick recap about the week. My week was great. I have my daily profit loss chart here, and Monday the 16th, sorry, I believe that was day, let me see here, Monday the 16th was here. It was day 8. Monday the 16th was day 8. And then Tuesday I had to take the day off because I had car trouble. Wednesday was day 10. I guess just because I took Tuesday off. It shouldn't really count, but I just counted it. Or day 9. I guess October 16 was day 9, for me, just because I took Tuesday off, so it didn't really count. So day 9 was October 16, day 10 was the Wednesday, October 18, and then day 11 was the Thursday, and day 12 was the Friday. So on day 9, the Monday, I was up, closed the day up 577, and these are my net profits, so I kind of take away my commissions already. I think I paid about 560 this month alone in commission. So, it kind of shows that if you are doing right trades, you'll still be up despite the commissions. So that's nice. I was up 577 on Monday, took Tuesday off. Wednesday I had a red day, I was down 20 or almost $30, and then Thursday I was up 185, and then Friday I'm down 62. So this week, I had 2 wins, 2 losses. My accuracy obviously wasn't that great, just because I was taking trades when when I was up, I ended up going back to a loss and things like that. So need to be more careful moving forward. Monday will be, let's see, date 13, Monday the 23rd, and I'm excited for the markets to open. I'm excited to have another week to try out my strategies, my make the changes that need to be made psychologically, my mentally changes, and just have a great time out there, right? Be on the field and just take as much screen time as I can get next week and learn as much more as I can, and just keep on going until I have this down to somewhat of a T, somewhat of a good pattern recognition and good setups and good strategies, and then once I go back live, I can kind of mimic what I'm doing on my practice account. So that's the goal. Right now I am up $1,831 on my practice account in 12 days. So not bad, and that's taking 2 days off during that month. So from October 2nd till October 20th, I've taken 2 days off voluntarily, just because of not voluntarily per se, but just because something happened, I couldn't trade those days. And then the rest I've basically been trading. What else is there? Let's see. Monday, the first week that I did have some trades, it wasn't a great week for me, just because I was kind of testing out my simulation account and the platform and stuff. So I was down 457 that week. But after that, on last week, I was up 1159. So that was one of my best weeks I've had, just because I had that one Tuesday where I netted 1660. So that kind of really helped me. And then the Thursday and Friday, those last 2 days of the week, last week, I netted almost close to $900 on those 2 days. So great days, a lot of momentum. And then same thing with this Monday, the October 16th, my day 9, netted big profit, almost $600. And then the past 3 days have been the Wednesday, Thursday, Friday have been a bit slow, haven't gotten a lot of momentum, and I've just been losing the profits that I did have. So giving away some profits, and I need to kind of kick back myself and be like, no, I can't get too confident where I feel like just because I'm up I can take any trade and I'll win, right? I still need to take good solid trades and stick to my plan. So thanks for watching, guys. I hope you guys are learning something. I hope my videos make sense. If you ever have any questions, any concerns, or anything you want to say, right, that I might be doing wrong, that might help me become better, or you might have a question about something, don't hesitate to ask me. Leave me in the comment and I'll get back to you as soon as I can. And that's pretty much it for this week. Next week we're back in the markets, starting with day 13 on October 23 on Monday, and we're looking forward to have a great week, and looking forward to get as much screen time as I can and learn more things and make more mistakes and learn, and also focus on my strength and focus on my winnings, right? Because next week I want to have another great green week and end this month on a positive note. So thanks for watching, guys. I really appreciate those who do watch my videos and taking the time to subscribe and just keep up with my shenanigans. I'll see you guys on Monday. Have a great weekend, or I guess the weekend's over now. It's Sunday, but I hope you had a great weekend, and we'll see each other tomorrow evening or tomorrow night. I'll post my next video of my day 13 recap. So see you guys then. Take care.